SoFi is once again in the spotlight, and today's analysis dives deep into what's truly happening with the stock. From unusual market behavior to institutional movement, we're breaking it all down. So, let's not waste any time and get right into it. Hello, everyone. Welcome to Daily Stock Update. If you're new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads and also enter our giveaway. But before that, alert, this is not a financial advice video. SoFi's stock experienced a decline of about 2.98%, settling around 21.9 cents. Right from the pre-market, signs of weakness appeared. While many growth stocks were on the rise, SoFi was heading in the opposite direction. This early dip stood out, especially with Treasury yields decreasing, a sign that the market was quietly preparing for a potential rate cut, even though nothing over the weekend really justified that assumption. Volume was noticeably lower for SoFi, with 48.3 million shares traded compared to the average 74 million. But SoFi wasn't alone. Many stocks traded below their average volume today. This suggests that the market was collectively cautious. Now, let's talk about a headline that may have contributed to the overall market jitters. There are reports that Fed Chair Jerome Powell could face criminal charges for alleged perjury. While this may not lead to any actual legal consequences, just the existence of these claims was enough to shake investor confidence, causing a momentary pullback. It wasn't a dramatic crash, and buyers did come back in, but it was another reminder of the sensitivity in the current market environment. To add more fuel to the fire, Powell is scheduled to speak tomorrow. Although he's unlikely to address the controversy directly, markets tend to react sharply to his tone, especially if he sticks to the familiar higher for longer interest rate strategy, which investors typically dislike. Another interesting point, the market seems to have hit a psychological resistance level. When the S&P approaches key milestones like 6350, just like previous levels such as 5,000 and 6,000, it triggers anxiety among investors. This mental barrier alone can cause pullbacks, even in the absence of hard data. Importantly, there wasn't any major news specifically about SoFi today. No SEC filings or game-changing announcements. However, short interest still stands at a hefty 14.7% of the float, with 230,000 shares returned today. That's a total of over 152 million shares being shorted. Yet, despite the rumors, it wasn't short sellers attacking SoFi, it was more about institutions locking in profits. This week is also packed with earnings reports from major players. As some institutions feel the market has already run too far, too fast, they're stepping away to wait and watch. That likely contributed to SoFi's dip, along with other high-growth names. In the options market, $33 million were placed in call options, compared to $7.7 million in puts. Still, over half of the activity had a bearish tilt, showing that large investors expect more downside, or at least some choppiness. Analysts predict about a 10% price swing post-earnings, translating to roughly a $2 move either way. Bullish expectations suggest SoFi could reach between $22 and $23, while bears are aiming for under $20. With the stock closing near 21.16s, it's clear the market is divided. Most trades today appeared to be sales, showing that even institutions are reluctant to buy this dip right now. It's possible they feel SoFi and many other stocks are currently overbought. Now let's look at a bit of behind-the-scenes data. The Darkpool transactions. A massive 18.2 million in Darkpool volume came in recently, likely market makers adjusting positions. This supports the idea that much of today's volume came from rebalancing rather than organic buying. Many options from the previous week needed to be settled, and market makers were probably closing positions throughout the day. SoFi currently trades between two key support levels, 21.11 and 20.58. On the upside, resistance levels to watch are 21.44, 21.97, and a more aggressive target at 22.50. From a technical standpoint, today's correction might actually be healthy. Stocks don't go up in a straight line, and overbought conditions often lead to short-term pullbacks. There hasn't been any new analyst rating yet, but history suggests we might see a few bearish notes this week as earnings approach. Firms like Compass Point, who haven't spoken in a while, may reappear to offer their take, possibly with a bearish slant, as they often do just before earnings. Even though today felt tense, the chart itself doesn't scream disaster. The super trend support is still intact around $19.26. The 50-day moving average sits at $16.01, and the 100 and 200-day averages hover near $14. That means the technical foundation is still strong. The stochastic RSI is beginning to move out of overbought territory, which is also a healthy reset. If the stock dips toward 20ers, this technical cooldown could be complete. To wrap up, this doesn't seem like a catastrophic fall. Instead, it looks like a much-needed breather for both SoFi and the broader market. A lot of this hinges on how upcoming earnings are received and how Powell's next comments influence sentiment. Friends, that's all we have for you today. What is your opinion about today's video? Get involved and let us know in the comments down below. Thanks for watching.